I'm going to get started. For those of you that don't know, I am Michelle Olivia Dunnigan. My friends call me Liv, and so can all of you. I am a travel agent and travel business advisor, and my ringer's on. I have the pleasure to introduce Kismet Madison to you today. She is my friend and associate. For 15 years, Kismet has worked in bankruptcy law firms. It was that line of work that led her to taxes. She began doing taxes over 20 years ago. She saw how individuals made mistakes that cost them dearly, and she also saw how some tax preparers could take advantage of people in order to make a quick dollar. It is Kismet's goal to educate her clients on their individual tax situations and to provide exceptional service. As a wife and mother of 5, Kismet strives to lead by example, sharing candidly with me. I want my children to see that working hard and treating everyone with respect pays off in the end. Welcome, Kismet Madison. How you doing, Kismet?
Thank you, Liv. I'm doing well today. It's a Tuesday.
It is. Well, we're going to dive right in. I have a few questions that we got together before we started, and I wanted to throw them out to you. And we may have some more questions added in the chat after as we're going along. So, first, talking about home-based businesses, and with it being the end of the year, I wanted to ask, is there a benefit, a tax benefit to starting a home-based business in December versus January?
And the answer is it depends. So the reason why I say it depends is because it depends on what the taxpayer wants to see. You can take expenses before a business starts making money, but do you want to take those expenses before you start making money, or kind of carry everything over until you start generating that income, and then you take all of those pre-expenses as startup costs and amortize it, or take a little bit of that expense over the next few years as your business continues to grow and as you continue to make more money? So but on the flip side, if you're making $200,000 on your regular corporate job and you want to take the $10,000 loss this year, even though you haven't actually started generating money, we can do that too. So it depends.
All right. And that's where a tax professional comes in handy. Next question I have for you. What are some deductions that travel business owners may be able to take that they normally wouldn't think of?
Difficult question, because each time you guys go on a trip or do something, it's different. So the rule of thumb is whatever you do for your business is a write-off. A lot of times people come and say, what can I take? What can I take? If it's associated with your business, then you can take the deduction. List it. If it's something that can't be taken or whatever, let a professional let you know. But there is no rule of what can and can't be taken. So the one thing I would advise you is, of course, you guys are taking trips, so you can let your clients know about the different trips, the different excursions, the different meals. But the only write-off is for you. So if you take hubby, if you take the kids, if you take me, my part of the trip, or your kids' part of the trip, or the husband's part of the trip is not the tax write-off. Only your expenses. So your portion of the hotel stay, your portion of the meal, your portion of the excursion, your portion of the cruise, the flights, the Uber, your individual expenses are a business write-off, not the fam or friends.
All right. Thanks for answering that one. Next, as some of us you'll see in the background are at home, this is a good one for all of us. What is the IRS definition of a home office?
So the IRS defines a home office as a space that is exclusively and regularly used part of your home, or a separate structure on your property that is the primary place of business. So it doesn't have to be an entire office. If you have a studio apartment and you have one corner of that apartment where you have your computer and your monitors and all your things, and you're working your business out of that corner of the studio apartment, that amount can be written off. So there's a couple of different ways expenses can be written off. It's percentage wise. So I'm just going to use my house because I'm familiar with my house. I have a 3,300 square foot home. My office is about 4% of my home. So I use a regular calculation where I take 4% of the mortgage interest, real estate taxes, HOA, lights, water, pest control, lawn care. We had to get the air conditioning unit upstairs fixed. My office is upstairs. Without it, it would be hot as hell. So I took 4% of that repair because I needed that air to work so I could work. I also have, an external office, which I'm in right now, but I still use my home office as the primary place. I only use this office to meet with clients and that kind of thing, but predominantly all of my income is generated from my home. So I take off a percentage of my home. The easier way to do that is, let's say you don't keep track of all of your Dominion, Virginia Power, and all those things. The simplified way is to, if your space is 300 square feet or less, you can take $5 per square foot and still deduct. But it's more of a deduction if you do it the other way. And here's the other caveat is, depending on how much money you made or didn't make, you may or may not be able to take the home office deduction because the IRS isn't going to allow you to take the deduction if it's going to cause a greater loss. But you still want to take the deduction anyway because it carries forward. So I had a client, he had been carrying for his home office, his business had been taking a loss. And then all of a sudden this past year, he had a profit. So what we were able to do is take that home office expense that it rolled forward for the last 3 years against his current year income. You're allowed to do that. So it helped reduce his self-employment tax and his taxable income, which is why you need a tax professional to do your taxes and you don't do them yourself. Because you only know what you know. You don't know what I know.
Amen to that. So what are some of the more common home office expense deductions that people use?
All the ones I just listed: mortgage, rent, lights, gas, pest control.
Gotcha. All right, last one that I have for you. What are your top 3 tax tips for self-employed or home-based business owners?
Keep good records. I can only do what you give me. So if you don't give me good records, good bookkeeping, I can only do what you give me. If you are not a good admin person or you don't do books well, because see, people like realtors, travel agents, you're people. So you like to talk to people, you like to get to know people, but you may not be so good with the admin and the little tedious stuff, keeping all the receipts and, reconciling your bank statements at the end of the month and all that stuff. Let somebody else do that, because how much is your time worth? My hourly rate, when I break it down, is about $125 an hour. So why am I going to spend $125 an hour doing something that's not going to generate me income? And I can pay somebody else to do that thing. One thing about self-employed people, we keep everything tight. We hold on to everything and we don't release what we can, because that release, it may cost us some money, but in the long run, it's going to help us make more money because now we're freeing up our time, our resources, so that we can generate more income coming in. So I know it may seem a little, but it's worth it. And then that's 1 and 2. 3 is make estimated tax payments if you have to. The only way to know if you need to make estimated tax payments is to keep good records. Making estimated tax payments keeps you from having a large tax debt at the end of the year, underpayment penalties at the end of the year, and then if you overpay estimated tax payments, you actually get a refund at the end of the year. So, but you can't do that if you don't know where you're going. So estimated tax payments are made off of your net, not your gross. So if you grossed $10,000, but it cost you five to get that money, then you're making estimated tax payments off of the five and not the 10, if that makes sense. So just a quick story about keeping good records. So I have a client of mine that's in Illinois. He's got a photo photography studio. And so for years, I've been like, you need to get a tax preparer. I mean, not a tax preparer. You need to get a bookkeeper. You need to get a bookkeeper. You need to get a bookkeeper. He got a bookkeeper this year. And guess what? I was able to get him a refund. So instead of him owing $5,000, he actually got a $2,000 refund because the bookkeeper kept account of all of his expenses. And then we added in the miles and we added in his home office. And so we were able to show a loss to the business, which then offset his regular income and yielded a refund.
All right. Thank you for sharing that. I want to open it up. We have a lot of folks on the call, and I'm sure some folks have some questions. Please use the hand raised feature so I can go in order of folks that have a question, or you can drop it into the chat, and I'll be happy to throw it out there for Kismet. So, Leonie, I see that your hand is raised. Please go ahead and share what your question is for Kismet.
Okay, so I'm hearing her loud and clear regarding the whole bookkeeping, and she said that well because that's not what I love to do. I love to book the travel. So for every bookkeeping expense that you use, so you're saying it needs to be also backed up by a receipt?
Well, if you're using the same, if you're using your business bank account and then you're using your business credit card, as long as you have a written record of that expense. If you have a meal expense, put it in your Google Calendar or make a note of what that meal was about. Who did you meet with? Because if you're ever audited by the IRS, they just want you to prove what we put on the tax return. So the better records you have, the better proof you have of what you did, of the business you conducted, of the expenses that you did, the better off you're going to be. So mileage app, QuickBooks, or a spreadsheet, whatever you need to help you keep things. Evernote is a free app. You can make notebooks in there. You can take a picture of your receipt, put it in the app. That way you don't have to keep paper. They've got scanners now that you can scan it and it immediately goes to folders that you put up. So just good records. The better your records, the better you'll stand against an audit and the better you know what you're doing in the business. And if your advertising or if this or that or the other is actually working for you or against you.
Perfect. Thank you, Leonie. Does anyone else have a question for Kismet? I do want to take a moment to mention, I see you, Trina. I'll be right with you. I do want to take a moment to mention that in the chat, you will see the link to Kismet's site, and she will do free consultations with you if you have direct questions, more personal questions for her. She'd be happy to help you with that. Trina, what question do you have today?
Good afternoon. What's the benefit of having an LLC for your business?
The LLC is more about creating a corporate veil for yourself. So when you create an LLC, you create like a twin. So you are here and your business is here. So if anybody was to ever sue you or anything, they can only take whatever assets were in the LLC. As far as taxes go, a single member LLC still goes on the same Schedule C. It still has the same self-employment tax. Now, the other thing is when you become an LLC, you can choose to be considered as an S Corp. Becoming an S Corp, you have to put yourself on salary. Point blank, period. If you're not ready to put yourself, I'm not saying take an owner's draw. This is not, oh, I made some money and I'm going to pull it out and I'm going to call it payroll. No, you have to put yourself on payroll where you're paying federal, state, Medicare, and Social Security taxes, because that's what self-employment taxes is the Medicare and Social Security. So you're either going to pay it through an LLC as self-employment tax, or you're going to pay it being an S Corp and putting yourself on a payroll with salary where you're paying taxes as the employer, you're paying taxes as the employee, you're paying the service to do the payroll for you. You can pay yourself however you want to pay yourself, monthly, quarterly, yearly, but it's got to be a reasonable salary for what you do, for all that you do. So that's one thing. So did I answer your question? Yes, no?
Yes, you did.
Okay.
Thank
All right,
you.
thank you, Trina. And I am gonna, we're about to wrap up in interest of time, but I did see one question that was in the chat from Dolores. She said during 2023, she booked some travel and has attended a travel conference. Should she be filing a 1099?
A 1099 is if you paid somebody to do work for you. So I don't think I'm quite understanding it. You can take all of your
Doris, can
travel.
you unmute and clarify for us?
Okay, so maybe I have the wrong form but I've been hearing some talk about 1099s and how we are a 1099 based company. So I thought that meant that I could file a 1099. So I'm wrong with the form number.
You're going to get a 1099 from the travel agency. So your
Okay.
commissions, the monies that you're receiving from the overhead company that you're contracting under, they're going to send you a 1099 showing your commissions, and then you may get a supplemental form that shows any of their fees or whatever that they took out because you were a contractor for them. And then you take that income and you put it on your Schedule C, and now that's your business income. And
Okay, so I'll be filing a schedule.
expenses.
I'll be filing a Schedule C.
Yes, you're a business owner.
Okay.
All right, last very quick one, hopefully. Shatara asked, if you just started your business at the end of the year, do you need to do taxes on it next year, or when do you report that?
Did you make any money this year? I mean, the answer is it depends. If you made money this year, then you need to report it this year. If you're just starting up and you haven't really generated any income, then like I said at the beginning, you can carry expenses over and take it in 2024 when you actually start generating income. But if you made income in 2023 from this business, you need to report it.
And I think that's a good segue for us to wrap up today. The best thing to do is to contact a tax professional if you have questions about your taxes. Thank you so much, Kismet, for popping on today and answering our tax questions. And
My
thank
pleasure.
you to all of our guests that have been on today. We really appreciate you coming on board. We will see everyone later, and have a great day.